Alright, what is up, guys? It is currently 1 p.m. and as you can see in price action, I'm going to show you on a 15-minute chart. I am trading on Ethereum. Um, as you can see from the morning and from last night, actually, we have been just selling off. As you can see, there is a lot of red candles, or black candles in my case. Very bearish overall. We did have a 15-minute fair value gap all the way up here, which was where the market wanted to fill in before coming back down. Obviously this is going to be the lower one, but we do have a higher one. As you can see right there, it gets filled right there. But today I was thinking in the morning, people are gonna want to be buying. Overall, they're gonna be buying. You know, it's really hard to trade when you have a specific mindset of not really knowing where the market's gonna go. But let's just take a look at today in the morning, what really happened. This was our 9:30 opening price, and as you can see, when we started, we first had a movement down, and this is going to be our first presented fair value gap, and this is going to be very influential because the market is going to want to refer to this price point later on. It doesn't have to be immediately, but we can use it for reference. I also like to use the first 30 minutes. So we have 9:30, and this is Eastern Standard Time, all the way to 10 o'clock. So we have the first 30 minutes of the market opening. What I like to do is label the low and the high during those 30 minutes. And the reason being is because the first 30 minutes is usually when most traders are placing orders. So pretty much it's where the market's getting injected a bunch of orders. So that's going to be a very good reference points to where the market liquidity is. And as you can see, we never traded to the high of this. So this could be a draw on liquidity. So this can be like a magnet. This is going to be our target. But as you can see, I drew this first presented fair value gap, and it was bearish. So as you can see, at first we would expect it to go up into it and then sell off, but it did not do that. So my first question would be, well, why did it not sell off? Why did it instead keep on going higher? And if we look on to the left, we can see that we do have somewhat relative equal highs here, or liquidity as well. I'm going to take this, and it's not going to be like pin perfect what I'm trying to reference, but you know, it's just like a estimation. But we also did have imbalances here, right? So if we extend that, you can tell that it's not gonna be like perfect because the market does go a little bit higher than that, but overall the bodies of the candles do stay inside of it. If we do something like that, so we took out liquidity, filled this imbalance, market sold off again, ended up reaching higher. And then if we take this range, and if we remember that anything above 50% is considered premium, right? So if we go like there, this white line is premium. So anything above would be very expensive. And as you can see, we ended up selling off there. This could have been a very simple trade setup where we could sell here and our major liquidity would be right here. But going forward, we can see how the market does like to use the opening range. Right here the market goes a little bit over, but the bodies of the candles do close below the 50% of the first presented fair value gap. We failed to reach into there, ended up selling off, and the whole morning afternoon session we've been just selling off. You know, most traders, and this is what I fell into as well, I was a victim of always trying to catch the bottom. So when I would see a retracement higher, I'd be like, okay, finally we are going higher, to ultimately just keep on selling off. And I would do that repeatedly every single day, where I would tell myself, we're finally gonna go up, and then I would get stopped out, and then I would see this and I'd be like, all right, well, we're finally going up here, there's no way, you know. And then I'd end up getting stopped out again, and that would lead me to blown accounts, and if not prop firm accounts, then actual real money. And you know, for me it would be more revenge trading, saying like, there's no way that the market is not going to keep on going down. And from experience, I'm just going to say that is the wrong mentality to have when it comes to trading. The two main points that I'm looking for where the market can reverse is the morning range, for me personally, how I think and trade, and then the afternoon range, which would be 1:30 p.m. to 2 o'clock. Same thing as the morning session. And as you can see here, we have the high, which is this black line right here at 32.39, and then the low. So the afternoon range starts, and the same thing, orders are getting pumped in. There's going to be major liquidity at the high and the low during those 30 minutes. And then if we label the first presented fair value gap, we can see how the market chopped for a bit until more like 3 p.m., which is the last hour of trading. And we can see how the market goes into this first presented fair value gap a couple times, almost reaching the high of the PM session, but failing. And that would be a very major point where I see the market that it's failing. You know, because people are seeing and thinking like, we're finally going to go higher. It's been going down all morning. And right when people see that we're going to reach this high, that's when the market drops. So in other words, we're trapping buyers right here, making liquidity for the market to then want to sell into that later on. If not there, then even higher, right? But as you can see, we sold off from there. We targeted the morning liquidity, or the afternoon range liquidity, to ultimately just to drop all the way down. And I do want to go to into a 15-minute chart real quick, just to point out that we did have major liquidity here and also right here. But then looking down into a 5-minute chart, I think it was a 5-minute chart, we can see, yes, that we did have a fair value gap here that we never filled in, right? So I don't want to make this too bright. want to extend it to the right. How do I do that? Boomer moment right now. Okay, so we're gonna extend this to the right. For those that don't know what a fair value gap, it's basically a candle that explodes either up or down, making this imbalanced. So there is only buying occurring here. So the market is going to want to come back down into it to balance it out in simple terms. The original fair value gap was this whole range right here. And as you can see, we dropped into it, went higher. But what I'm trying to point out is the unfilled portion of this 5-minute fair value gap. And as you can see, there's nothing in here on the 5-minute chart, which is fairly balanced. Maybe on a 1-minute chart, there is some 1-minute fair value gap in there, but on a higher time frame, I just want to reference this unfilled portion. So we have yet to trade to this bottom and this top right here, and at the same time, obviously we have liquidity right there, right? That's where the market really had its huge run up from there on out. Same thing right there, we have more there. All right, now coming back to here, as you can see, we have a 5-minute fair value gap here that's not being respected right now, so that's a good indication that the market does want to go higher. But using that 5-minute, I'm gonna leave it like this. I had a very good friend, mentor that told me that I move my charts too much and that I should just keep it like this so that his head doesn't hurt. So I'm gonna take his advice. But looking at this chart, what my eye catches right now is how we filled this inefficiency on the 5-minute chart. And what I really like is how the bodies of the candles stay right at the 50% mark. This is a 1-minute chart. So from here on out, we can see how the market reacted higher, which is a good sign. And this happened right at the end. And I was also kind of thinking, like, most traders are going to want to take longs at the very end. So there's probably going to be a fake movement up to create liquidity, engineer it. So we can put something like engineered, right? Right. So now the market drops lower. And from here, we do have a 1-minute fair value gap. But I'm going to remove this for just 1 second. This was boom. I don't remember what this was. I think this was the afternoon range low. So we finally had a movement up, down. And what my eye catches is how this right here, it's making higher highs, higher lows. So this would be a very crucial point where I don't want to see the market go below this. It does do that right here, but that's acceptable. It doesn't have to be pin perfect. It's just a good. It doesn't have to be pin perfect, but yeah, that's it. It doesn't have to be perfect. But this would be a block that is going to be sensitive to price. But I'm going to remove all this back. So, and then my entry was right here at the 1-minute fair value gap. And what I'm targeting is obviously the engineered liquidity. would be a good place to take partials. I can't really do that since I only have one contract. But this would be my second, or my full take profit, the first presented fair value gap. But yeah, so we do currently right now have this 1 minute fair value gap as well that we do have to take into account. We also have a 1 minute fair value gap here that I don't really want the market to come back into since we already somewhat filled it in. But yeah, I think my explanation for right now, I think my major key is that I waited for the market to do its thing and didn't place a trade until today's close, which crypto never closes, but you know, the major liquidity, you know, injection of money is during the opening hours of today's trading. But yeah, since I am using Mexi, which is a crypto exchange, I can't trade on TradingView, but I did place a trade here and I'm looking to sell into this 1 minute fair value gap, also the first presented fair value gap, since we already did a lot of damage to the downside, and it could be that the market does want to go lower. Could fill this 5 minute fair value gap. It doesn't have to, but obviously that's where you would want to take a stop loss to make sure that you can either get stopped out in profit or, you know, just keep your stop loss at the low of this fair value gap. But as you can see, we're dipping into that 1 minute fair value gap right now. What I do want to look at right now, I'm going to cut this. Okay, so what I'm looking at now is the 1 minute chart. This was our old 5 minute fair value gap. As you can see, we have yet to fill this portion. But when we get really deep and very on the 1 minute chart, we can see how the market has yet to fill this 1 minute, and then also this 1 minute right here too, right there. So that could be a possibility where the market wants to go. Also, we have major liquidity here, but I don't really think that the market wants to go there. But we do have this unfilled portion and also this right here below the 5 minute. So yeah, basically right now I don't want the market to go below here, right? We could have a short-term retracement higher, but there could be a possibility where I think the market wants to go here. We just have to take that into consideration when day trading, because the market could look like it wants to go higher for a little bit, but then at a specific time it wants to come back down into here to fill these inefficiencies, and then the real move happens where we keep on going higher. As you can see, guys, we have finally hit my personal take profit. As I was saying before, how we started from below here. So basically, you know, the market closed around over here, 4 o'clock, we had engineered liquidity. When I say engineered, what I mean is pretty much a fake move so that the market prices in a specific level so that in future reference we are able to come back to that level. So it's basically the market is going up into this level so that we can make liquidity here, so we can engineer that, and then we're able to then come back into that. It's pretty much like a sticky note, how I think about it. But as you can see, when I said the 5-minute fair value gap, we have filled it here. So this would be a possibility. It's not always, 100%, but it is better, higher probability that the market will want to reverse from here. But as you can see, if you were to try longing this, it wouldn't have worked. And I think personally it wouldn't have worked, since that basically all day we've been waiting for buys. Like retail minded traders were like, it can't keep on going down. But that's kind of how I was thinking about it today. Not really trying to force a trade, but rather just waiting to see what the market really wants to do. And I just kind of ingrained it in my mind, telling myself, I don't think we're really going to go up anytime soon until a certain time where it starts reversing. So in this case it was here. I did enter here on the 1-minute chart. I entered here, I got stopped out because I put it back to break even, but then I re-entered around here, and right now I have my stop loss around here, so I will be getting stopped out either in profit, or I'm going to be trying to hold as much as I can until the market tells me that it no longer wants to keep on going higher. So I will probably end up uploading this video later tonight and showing you my entries and exits, just for proof, because I know people are gonna want proof. But it does look like we're reaching the PM high right now. So then the next target, we have a bunch of inefficiencies here, and then since the morning, we are all the way up here. So this could be a possibility reaching up into here, but it obviously does not have to. But so far, price is looking pretty strong. But we do need to be aware of price wanting to fill this 5-minute fair value gap. And also the 1-minute fair value gap that I showed you guys earlier. But other than that, that is it for me today. Thank you guys for watching.